Okay, I think we're live. Let's go ahead and wait a few seconds and see who can get in here.
Perfect.
Hey everyone, type A3 if you can see me. All right, so we'll just give us a few seconds while people come in here. But
Perfect.
yeah. So guys, today we have a special guest. I'm gonna flip on over. You hear another voice. Who is that? All right. Well, I'm gonna
Yes.
flip on over. This is Andre. And Andre, we're just going to give everyone a few seconds to get in here.
No
Um,
rush.
yeah, man. How's your
I'm
uh,
excited.
how's your day been going? How's Have you been looking at the market today? Let me see. I haven't even really looked. I looked a little bit.
Big sell off on ES, on NQ as well. Like the SPY Qs selling off pretty heavily.
Yeah.
Um, but the market's been wild in the last couple days. Like
Mm-hmm.
this absolute V-shaped recovery to almost all-time highs again.
Right.
I mean, as shocking as it is, based on what's happened in the last year, like, should we really be shocked?
No, for sure
Yeah,
not.
exactly.
All right. Let me see if we got some people coming in here. 1 second. Let
No
me just
rush.
add this. We are live, and I will just double check real quick. Let me just go to our YouTube, make sure we are indeed live. I believe we are, but
That'd be that's important.
yeah, no, for sure. No, yeah, we're live. It says we are. All
All
right,
right.
cool. So we're gonna get started here in just 2 seconds. Just giving everyone a second to jump in here. Yep, I see the live
That'd be
stream.
that's important.
We
Yeah,
got about
no, for
20
sure.
people watching.
Perfect.
So let's go ahead and get into this. So Andre, why don't you go ahead and give everyone a little intro about who you are and your background and what Edgeful is all about, man.
Perfect. I'll actually kind of combine them. So I'll give you a little bit about my background and I'll go into a little bit of the story of how Edgeful was founded, what it is, kind of what it does. But hey, everyone. Thank you for your time. My name is Andre. I'm the CEO and founder of Edgeful. Edgeful is a data analytics platform, which I'll tell you the whole story in a second. But my background is in finance and accounting. I was an analyst at a hedge fund called Weiss Asset Management. I was also an analyst at Goldman Sachs. Left Goldman, started to trade. And when I started to trade, I traded options specifically. But when I started to trade, when I was learning more about the technical analysis side of trading, I came across the gap fill, something that's very simple, very easy to grasp, and something that I gravitated towards. As I researched this topic of like the gap fill, I saw that people kind of talk about it as, oh, yeah, all the gaps fill. The gaps fill 100% of the time, which obviously in trading, nothing happens 100% of the time. So I was like, all right, I want to know what the actual data is behind the gap fills. How often do they fill that same day? So given my analytical background, I'm very happy to go in Excel and kind of nerd out on Excel. So I download a bunch of data and now I can see, okay, this is how often gaps upfill. This is how often gaps downfill. And from there, I start adding more into this Excel file until, for those of you who are familiar with Excel, you know that it's not built for this type of analysis. So it starts to take a lot of time to build these things out, to build the reports. And I go online looking for a tool that tells me how often do gaps fill? How often, what's the continuation of a break on an opening range? What weekdays make the high of the week, et cetera, all these different things. And there's not a tool that exists that does this, which to me is shocking. So I was like, you know what? I think we have an opportunity here to build something that gives people the ready made for you, done analysis that is continuous. It updates all the time in the form of Edgeful. So we try to make it as intuitive as possible. We make it like, as you can see by obviously my screen share, we try to make everything very simple, very easy on the eyes, kind of try to make it as less intimidating as possible. So that's the story of Edgeful. That's a little bit about my background. That's how this company was founded. So yeah.
So one thing that I love I love about this, we had a call a few weeks ago and he showed me all
Yeah.
this is it kind of looks like it's an extension of TradingView. Like I feel like you got TradingView right next to it, right? And I'm like,
Yeah.
"Oh my gosh, it kind of feels like it's just like all one, which I love.
Yeah.
I love
Yeah.
like dark mode and all that kind of
Yeah.
stuff.
Same. Yeah. It's TradingView does something really well. I mean, they're clearly the leaders in the space and what they do, and their interface is extremely intuitive. And they have a ton of information in here, but they still display it in a way that people can grasp and people like love it. So we always take notes from the people who don't have a Windows 95 interface. That's
Yeah,
something
for
that
sure.
we focus very heavily to avoid is a lot of the other data platforms and some of them are incredible platforms, but the interface causes a lot of friction for the users because it's just not intuitive, it's not nice anymore. Like people are very used to having pretty apps, and that's why we want to focus on maintaining its looks.
For sure. So
Yeah,
why don't you? I'm curious. So a lot of you are probably curious how this works. I've tried to walk through it a little bit, but
yeah,
obviously, Andre's the master. So we're gonna let him show us uh, just kind of a couple, maybe basic examples, and then maybe a
yeah,
couple like advanced ones.
yeah. Perfect. So I'll start off with some of the more popular ones. We can go into anything else if anyone wants to see anything, if they have any questions on like, do you have anything on the whatever? As things come up, we'll just kind of take it play by ear. So I'm gonna walk you guys through top to bottom how everything is laid out so you guys understand what am I looking for, where is it, and we can go from there. Then I'll go into the gap fill report itself. So up here at the very top, we have the asset selector. So we have stocks, Forex, crypto, and futures. If you trade options, you would be focusing on that stock section. So you're going to see the data, for example, on Tesla, and then you can take trades on the options based on how Tesla moves. So right now I'll be sticking to futures for this case. This right here, this nav bar is how you navigate the entire site. This is your steering wheel for the site. So we have three different types of reports: price action, volume, and indicator reports. So right now we have selected price action. Then you click on this and you can see all of our price action reports. Then we have every ticker that you can imagine. This applies to stocks as well. That applies to every Forex pair and crypto. If we don't have something, you just email us and we add it in.
Wait,
Then,
you just added in? Hold on. So tell me about that.
yeah. So, for example, someone had asked, I don't know, apparently lean hog has gotten very popular recently for some reason.
Uh
And
huh.
someone had asked, and or maybe it wasn't lean hog, it was like soybeans or something. I forget what it was. But they were like, yeah, can you add in? I want to see the analysis for soybeans or wheat or orange juice or whatever. I forget
Uh
which
huh.
one. I think it was soybeans actually. And we were like, yeah, of course. So we just add in all the data, and I mean that's how it works. Like we have data providers that provide all of the price data to us,
Okay.
and if we don't have it in this list, we'll just add it. So that same thing goes for stocks. Like we used to not have XOM, for example, which I think is a gas. It might be something like relating to energy. And you make a request and we add it in. So if there's something that you trade that we don't have, we can get that added. Like the DAX, for example, is another one. The FTSE is another one here, the FTSE 100. These are all things that we can just get added in. So regardless of what you trade, we'll have an answer for you.
Interesting. And how would I go about, like, let's say I wanted to get something added. How would I go about doing that?
So in this sidebar here,
Uh huh.
we have if you just like the way to expand it is just this little arrow right here.
Uh huh.
If you just click on support, this one right here, it'll pull up
Okay.
an email and you just send us an email. We're actually going to be we're actually working on implementing a intercom, like the actual, so you can chat with us right in the app without having to send us an email. So we're building it out right now. But for the meantime, if you just click on the support and say, hey, can you add ABC stock or ABC ticker? We'll get it added.
That's cool.
Yeah. Yeah.
Awesome. All right. Well,
So
let's keep trucking.
yep. So then for futures, as you guys know, you will have to trade in a certain session, or most people like to stick to a certain session. So we have the ability for you to filter the sessions that you want to look at and the data by session, which I'll touch on in a minute. Then you can look at the reports going back 5 years. So we have these pre-templated shortcuts. You can go to 1 year, 6 month, 3 month, 5 years,
Five
etc.
years. That's a lot of data.
It is a lot of data, and personally, just kind of like side tip for the viewers, the people who are interested in trying this,
Uh huh.
I don't really recommend going that far back
Oh,
because if you think,
really?
yeah, so if you think about 5 years ago, that was pre-COVID, And the markets now don't behave the way that they did back then. So yes,
Oh, good point.
you get a bigger sample size, but are you really getting the most relevant information to be trading these markets now? And
Mm-hmm.
in my opinion, so now again, we have the option because people like to look at it, but in my opinion, that is too far back. As in the day trading and the swing trading context, if you're swing trade for a couple of days, you do not need to be looking at data from 2019. It's just too far back.
Mm-hmm.
I like to recommend looking at the 1 year, the 6 month, and the 3 month and comparing how they are. So if the results are very similar, so like let's say the results are 65% on the 1 year and then maybe 68% on the 6 month and then maybe 65% on the 3 month, that means that the environment for the report that you're looking at is the same. That means run with it. You're still good. But if the shorter timeframes are like completely flipping from the longer timeframes,
Okay.
now that means maybe you want to take a step back on this one because maybe something is changing.
Okay.
It's the way that I like to look at it.
I like that. Okay. Interesting. So you
Yeah.
usually just do 2 years, you said?
I like to do 6 month
Six
and one
months.
year.
Okay.
Yeah, 6 month and 1 year.
Okay, cool.
Yeah.
Awesome.
So these little bubbles are just kind of filters. So the gap fill report by size, by weekday, et cetera. If you want to look
Mm-hmm.
at a little more nuanced view, you can see that here. Then we have the visual, we have the table, we have an explainer graph. We have trading view indicators, which I highly recommend everyone that does the free trial that
Uh-huh.
you take advantage of this. So all you have to do to get over 20 of our custom private indicators is just click on this button here and put your trading view username right here, which you can
Really?
find. Yeah, and you can find your trading view username just because some people aren't aware. You just click on your little profile button up here,
Uh-huh.
and you can see mine in this case is obviously Edgeful. And all you have to do is type this in right here, and then you get access to 20 of our invite only scripts right here. There's over 20 of them.
Can you show me what one of those looks like? I'm just curious.
Yeah, of course. So for example, I will show you the gap fill by session. So this is specific to futures, and you can see what this is doing. So it shows you the target. This yellow line is your target.
Mm-hmm.
And then it will show you the area that is remaining of your target. So here, price, there was a gap up today, and price comes down, and then it touches the yellow line, which is your gap fill area. I'll show you another
Wow.
one, the opening range break.
Oh
This will
yeah.
automatically plot the high and the low of the first 15 minutes
Mm-hmm.
on every single day, so you don't have to worry about doing it. And
That
this
is
is
so cool.
yeah, we literally have like over 20 of these, and we come out with new ones every week. And
Uh-huh.
this is part of the plan. So you don't need to pay any more for this. You get all of them as part of your plan. So highly recommend taking advantage of the indicators.
Okay. Cool, man.
Yeah. So then we have a little bit more explainer text. If you're not really sure what it is, we have a table that will break down exactly what the report results are. So you can see every single day of whether it was a gap up or gap down and whether it filled. You can sort and filter all of this table, and
Mm-hmm.
then the price chart. And then finally, and in my opinion, the most important piece, other than the data, of course, is this video. This video will explain what this report is measuring, how to use it, live chart examples, and how you can apply this report directly to your trading. So they're at most 5 minutes. I highly recommend watching these videos when you come across a new report that you might be interested in.
Okay.
Yeah.
So this is
So
this is just sort of like if I don't quite get it, it just explains it.
yeah, exactly. Exactly. And it'll tell you like how it's being measured, how everything works. And it's a very digestible too. It's like part of the core of the company is making sure that it's digestible. So for sure, 4 or 5 minutes max, it'll tell you exactly what you need to know and how to like use it in your trading.
Okay. Right on.
Perfect. So now we'll go into one of the reports. No more kind of showing you around. And this is personally one of my favorites. This is the report that actually created this company. This is the report that I first started in the Excel, and it's the gap fill report. For those of you who don't know, a gap is just from yesterday's closing price to today's open. And if today opens higher, that's a gap up. If
Mm-hmm.
today opens lower, that's a gap down. Typically, you want to be targeting that previous day's closing price. So if it opens below, you want to have a long bias targeting that previous close. If it opens above, you want to have a short bias targeting that previous close. The way to think about it is if price these gaps tend to fill, you want to target that area, obviously.
Okay.
So in the last 6 months, in the New York session, 64% of the gaps up have filled, which means prices come down to touch the previous New York close. 61% of the gaps down have filled, which means prices come up to touch that previous New York close. I'm going to show you exactly what this means right now.
On the day, right? On the same day, on the very next day.
Correct. And I'm going to show you exactly what this is with an example from today.
Oh, sick.
So yeah, this literally happened today. And personally, it's one of the most like no-brainer trades in my opinion, because it's such an easy setup. You have your bias, you have your target, and you just have to find your entry. So here we have the New York session selected. So the data that we're looking at is from 9:30 to 4.
Okay.
In this case, we're looking, this is our market sessions indicator. So it automatically plots the area of the New York session. So you can see right here, it's 9:30 to 4. My previous New York session closes right here, and I'm looking only at the New York data. So this is my gap fill line. This yellow line right here is my gap fill.
Yep.
When I'm only looking at that New York session, you can see right here, price opens right there, which I'll make red. And what you can do here is take a short entry targeting this area right here. On ES, for those of you who trade the futures, this is almost a 20-point move. This is a fantastic trade to take with very little drawdown in this case, but the probabilities are very, very high around these trades.
Guys,
highly
one contract, $1,000 right there. Right?
Yeah, exactly. And it's such a no-brainer trade because you don't have to worry about your target. You don't have to worry about your bias. Is today going to go up? Is today going to go down? You just have to play the odds of what's going on here. Now,
which is 64%, which is definitely an edge, right?
Correct. Yep, 100%. And when you're trading SPY, for those of you who trade options, if you're trading SPY options, let's just go quickly to look at SPY just so you can see how much the gap was. So again, I'm just going to my previous close, going to today's open, and on SPY, that is almost a $2 move.
Oh yeah.
So think about the percentage change on the options. If you're taking at the money options, that's an amazing return. It's probably close to 100% return if you were to enter in this area near the open, targeting this area.
For sure.
Now,
oh yeah. I mean, your options are definitely going up probably $1. You know, like most at the money options I find 0 DTE. If you're trading 0 DTE, you know they're around $1. But yeah, down a whole dollar or two into the money for sure. They're gonna
almost yeah. And these are like the no-brainer trades that like people just overcomplicate trading for some reason. And like this is the type of stuff that you can be doing, that you have the data that will always update. So if the market environment changes, you still will know, okay, now my odds are 50%. I'm going to kind of take a step back from this report.
Oh, so this updates daily too.
Updates every single day. You will always have the most recent information. Yeah.
That's crazy.
So by the end of today, this will all update to accommodate today's price action. And when you're looking the last 6 months, what you're doing is you're adding in a new day and you're taking off an old day. So you're always looking at only 6 months. So the most recent 6 months. So you always get the most recent market environment right into these reports.
Got it.
Yeah. So I'm just going to switch back to ES here. And again, that 18-point move, or almost that 20-point move here, so 18 and a half. Now, I want to mention something because I know that a lot of traders can't really hold on to their winners. It's a problem that everyone has. It's a problem that everyone needs to work on, obviously. But what if you know yourself, you don't want to target a full almost 20-point move. You kind of struggle to hold on to your winners. What if you just want to know what the odds are of targeting half that move?
Okay.
Which right here.
Oh, only half of it?
Yeah.
Okay.
So now if you just say, I want to take my profits and I'm just going to make this line green.
Yeah.
And you can see right here, this is the green line. This is the halfway point between the open and the previous close.
Got it.
Now let's look at these steps.
So halfway to filling the gap.
Correct. Yeah. Just 50% of the gap fill. Instead of targeting this yellow line, you target halfway.
Okay.
Now we're seeing that the odds are 64% for a gap up and 61% for a gap down. What I'm going to do now is I'm going to go to this customize button right here. I'm going to go to the gap fill percentage and I'm going to change it to 50%.
Okay. Now this is starting to get cool.
Now you're looking at 80% probabilities of if you
Okay.
just target this green line, you're now going from 60% to
And
80%.
look, it actually bounced right there. Isn't that funny?
Yeah.
It would have tapped your target and you'd been done.
Yeah, exactly. And now you're looking at 80%. And you can customize this to be any percentage increment. You could do 75, you can do 80, you can do 30 if you wanted to. The main one that people find the most success with, that especially the ones that tend to not be able to hold on to their winners, is that
Mm,
50% mark.
yeah.
So anyone, I highly recommend looking at this 50% mark. Go through, look at NQ, look at SPY, look at Tesla, look at Nvidia. You can look at literally any asset that you trade, even if you trade Forex. I don't know if anyone here is watching here that's watching right now trades Forex. We have every Forex pair, we have every main crypto asset. So you can literally do whatever anything that fits your style, you can go for.
Okay. I'm gonna pause you right there just for 1 second.
Sure.
Guys, this is sick, right? I mean, come on. This is awesome. I need some activity here in the chat. Like, do you guys have any questions, any concerns, or should we just keep rocking and rolling with the examples? You let me know. What are you guys feeling?
Yeah, I mean, any questions, please don't be shy. I know that sometimes people feel like they might ask stupid questions. This is a new concept. People don't like, nobody has done this before, so don't be shy to ask
Mm,
questions
yeah, for
because
sure.
I mean, I'm extremely confident you've never seen anything like this. So don't be scared to ask because this is a new concept.
Yeah, man. I mean, I got some
Yeah.
questions.
Good. Let's do it.
So, one well, actually, I want to go back to the first week that you and I we met and we were
Yeah.
looking at the RSI indicator. Can you pull that up real quick?
Yeah. So I click on my report type.
Mm-hmm.
I go to indicators. I go to RSI here.
Okay. All right. So my question is this. Okay, yeah. So what I was doing is I was like in this freaking Tesla trade with puts, and I was getting like
Yes.
smoked. But I went to your RSI indicator, and it told me how many days consistently does Tesla remain in the RSI. Is that this report or a different one?
This this specific one
Yes, right there.
measure.
There it is. Average consecutive overbought bars, right? So I was looking
Yeah.
at Tesla and I was like, okay, on the daily, we've been overbought for I think it was like it was around there like 6 or 7 days. It was during that run.
Yeah.
And
Right here.
yeah, and I was like, okay, we've been overbought for like, about the average that I see here in Edgeful.
Yeah.
I'm just gonna hold my puts. And then sure enough, that one day it dropped like 10% or whatever.
Yeah.
And I made my money. But if I hadn't had that data, I might have been a little more scared, right?
Yeah. Yeah.
So
And I remember we were talking, you were saying what's the price target you think it could get to? And I was like, this run is crazy, but I think like 245 or 240, I think
yeah.
I had said. And I mean, I know it was a great trade on your end, honestly, like picking that top. And
It was, dude,
uh
it was crazy. I'll tell you that. I had like one
yeah,
week. I had like 1 week to expiration left on those puts. I was down
yeah,
sizably. I was at breakfast, and literally in 1 hour, I started getting all these alerts on my phone. And like, I think the
yeah.
trade went from being like down 2,000 to like up 2,000, like
Yeah.
this. I was like, oh, all right, cool.
Yeah, perfect. Thank you, Elon, right?
Yeah, yeah, that was funny.
Yeah. And another thing that I want to mention is that right here we have a button that says build a report. So if there are reports that you guys want to look at, so like for example, I'll just go back to the price action here. Almost all of these reports were by request. So we launched this product in January, this app in January with just around 10 reports, all built for me and by me. Now we have close to 100 reports that are all by request, people coming in and saying, I want to see performance around whatever, earnings. I want to see what weekday makes the high or the low of the week. I want to see this. I want to see that. How often do fair value gaps get mitigated? I don't know if you guys use fair value gaps. I know it's really popular right now, but I want to just emphasize that you guys can actually like build your own report. Just send us the information that you want, explain what you want, and we will literally build it So you'll have it in here to look at any stock, any futures contract, any forex pair, any crypto on any time frame. So that's the
Wow.
one thing I want to mention. Like for you, you mentioned you like to use the RSI. Other people like to use other things. It's not specific to what we have. It's about what you guys want us to build for you, and we make it like a completely custom experience for you to cater to your trading style.
Dude, that is so cool. By the way, I just turned my volume up. So someone was like, Calvin, your volume's down. So hope my volume's a little louder now, guys.
I can hear you perfectly.
Okay,
I
cool.
hope my
Yeah.
volume's good too.
No, yeah, your volume's great. They're like,
Perfect.
he's way louder than you. I was like, all right, I'm gonna crank this up. So, yeah, okay, cool. Well, maybe you
Should
can.
I go through some of the should I go through some of the other popular reports that we have?
Yeah, for sure. I want to see like a few.
Perfect. So I just touched on a more day trading scalping one. I'm just going to switch to the 15-minute here. And I just touched on a scalping kind of day trading one. I'm going to go to a swing trading one. And I'm going to go
Okay,
to
cool.
high and low by weekday. So let's just look at this here. And I'm just going to remove these little drawings and I'm going to show you here so far. Okay. What this report looks at is the highest points of the week, which is right here in the blue, then the lowest points of the week right here in the black.
Interesting.
So in the last 6 months, looking at ES, looking at that New York session, almost half of the time, the highest point of the week, 46% of the time, has been on a Friday. The second highest probability weekday to make the highest high of the week is Thursday at 23%. You're looking at over a 60% probability of the highest point of the week being on a Thursday or a Friday. Let's look at this week right now. Monday's over here, Tuesday's over here, Wednesday, Thursday made the high. Now, one thing that really stands out to me here is that in the last 6 months, 4% of the time, Wednesday has made the high. And if you know that it's the least likely for Wednesday to make the high and the most likely for a Thursday or Friday to make the high, taking a swing trade long on a Wednesday into the end of the week is a very successful trade. So once price reclaims Wednesday's high, when Wednesday's currently as the high of the week, you can expect price to come up either on a Thursday or on a Friday.
And this
Does
is
that make
on
sense?
and this is on Spy.
This is on ES. Let me just switch to
Okay,
SPY. I just switched to SPY. Very similar stats here.
for sure.
46%. I can stick to SPY now. I'll just switch right here to SPY.
So, but
Just
basically, what you're saying is open calls on Wednesdays.
what I'm saying is if Wednesday makes the high of the week, so let's zoom in and pretend that today didn't happen yet. We're looking at Wednesday here.
Okay.
This is Wednesday. You can see right here that Wednesday has made the high of the week,
Okay.
right? It's higher than Tuesday and it's higher than Monday's high. The highest point of the week so far is on the Wednesday. It is extremely unlikely that it stays this way.
Right. It's more likely that the next day
That
or Friday,
Thursday
yeah.
are going to break this high right here. So what you want to do is calls, buying, or just being long in general, expecting price to reclaim Wednesday's high on Thursday or Friday, which has happened clearly today. And I mean, in the last 6 months, 46% of the highest points of the week has been on a Friday. So it's not, I mean, it looks pretty unlikely right now, but it's not very unlikely that price overnight and into tomorrow will break this Thursday's high.
Right. Yeah. I mean, in this market, I wouldn't be surprised at all. Now, we do have a couple questions coming in.
Good. Perfect.
So one question is there an indicator to give you average time to fill the gap?
We do have that, which is
Oh,
great. So in this case, what you want to do here is so now we're looking at SPY. We're not looking at ES anymore, but it's all practically the same. These little variants right here, you want to be looking at this one right here, fill time. Click on that. Now you can see, now you get to choose how far into the market open do you want to filter for? So if you like to trade that first hour, you click on the first hour. That's from 9:30 to 10:30 Eastern time. You click save. Now what you're looking at is the gaps up here. And now I'm switching to the gaps down. Roughly about 60% of all of the gaps that have filled before 10:30 a.m. or 1 hour into market open. Let's push this out a little bit more. Let's go to 2 hours. Now from 9:30 to 11:30 a.m. Almost 80% of all of the gaps up that have filled before 11:30 a.m.
Got
So
it.
what this means, you do not want to be targeting a gap fill at 1 or 2 or 3 p.m. if it hasn't happened already, because it's unlikely. There's only 21% of the gaps that have happened after 11:30. Let's push this out a little bit
Right.
more. Now we're looking from 9:30 to 12:30, the first 3 hours. 84% of all the gaps that have filled in the last 6 months, the gaps up that have filled in the last 6 months, have filled before 12:30.
So if it hasn't filled by lunch, just forget it. Basically.
Exactly.
Yeah.
Exactly. You're going to save yourself a lot of pain by sitting in consolidation or sitting in chop. If it hasn't happened by lunch, just cut the trade, wait for another day, wait for another setup, because it's unlikely that it's going to happen after.
Got it. Okay,
Yeah.
cool. We have another
Yeah.
question. Does it
Good.
work well with the TradingView app? I mean, yeah, guys, he just showed at the beginning of the stream that there's indicators, right, that you can
Yeah.
throw on. You just got to put in your username,
TradingView username. Yep.
and then you get access to all the indicators. Which how many are there?
I think there's over 25 now. We have 3 more that are in the works that are probably going to come out this week.
Oh, cool.
And also, just so you guys know, not only can you request a report, you can also request a custom indicator. So we will build
What?
TradingView indicators for you.
Dude, who is doing all this magical work? Is it you? Like, this is crazy.
We have a CTO. He's incredible. He used to work at Amazon. He's great. So we have an incredible team that's like pushing everything. We're extremely young too. We launched this product in January, so it's been like 8 months now that this product has even been out. We will build custom indicators for you. The one thing that I'm going to say is that we don't build indicators with buy or sell signals. So we're not going to put like a buy signal or sell signal. But if you want to see, hey, can you build me an indicator that shows me the New York sessions? Show me one that's for the gap fill or the opening range break or the whatever. I mean, the previous week's range or whatever it is. Those are the ones that we'll build. We're not going to build any around signals or anything.
I was telling Jeremy and the rest of RLT because we have names for the type of gap. So, for example, if the day before was a bear day,
yeah,
and then we're gapping above that, we call that a bullish gap and go, which is kind of cool. Yeah, wow, that was really loud. Sorry for anyone that had to hear that just now. It was an indicator going off.
Oh, I didn't even hear it.
Yeah, no, you wouldn't hear it. It's just the people watching.
Okay. We can build that out for you.
Yeah.
So I'll make a note of that after this call to add in another little variant so you can check for the days before. So whether the day before was red or green.
Yeah, because I'd like to know when it doesn't fill, right? Because it's like if yesterday was a bear day and you have a bunch of sellers that are now trapped because we're gapping above yesterday's high, or even yesterday's close. What's the likelihood that it doesn't fill and that it just keeps running, right? That's why we call it a gap and go.
Yeah.
But then we also have one where it's like, okay, the previous day was a green day, and now we're gapping above that. We call that a bullish retest gap. So it's bullish, but what's the likelihood we come back down and fill it? But it has to be a green day followed by a green day. So just really cool things to dive into.
Yeah. And this is exactly the type of thing that we can build. And just so you know, just for your, this is something that I found very interesting. The size of the gap almost entirely dictates whether it's going to fill or not. And I'm going to switch to that quickly. So here, this is the smallest possible gaps. This is gaps less than 0.1%. So tiny, tiny gaps. But we're looking at SPY in the last 6 months. And now what you can do here is you can see these little bubbles. these are the different filters that you can pick. So less than a tenth of a percent, every single one of them have filled in the last 6 months. Now you bump this up a little bit more to between zero point 0.1 and 0.19, still extremely high fill rate. These are tiny percentages, tiny moves right now. But as you go higher and higher, now we're between 0.4 and 1%. Now you should not be taking this trade. The edge is no longer in your favor on these larger gaps. A gap above 1%, no gap down above 1% is filled, and 83% of gaps up above 1% have not filled.
And once again, guys, this is talking about the very next day.
Correct. That's exactly right. So
Yeah.
very, very good point there. We're always referring to the most actionable time frame, which is from yesterday to today. When a
Yeah.
trader opens up Edgeful, you're creating your pre-market plan, you're going through your routine, checking yesterday's gap to today. The reason that we don't have gaps from multiple days is like, for example, if Monday's gap didn't fill and Tuesday's gap didn't fill, then like, what are the odds that like Monday's and Tuesday's gaps fill today? And it just creates a lot more headache. And again, we
No,
want to
for
make sure that it's
sure.
intuitive. We want to make sure that it's easy to understand. You don't want to like mentally juggle.
Yeah.
So that's why we do it from one day to the next.
Yeah. Well, I think there's already like statistics out about that anyways, right? Like is it
Yeah.
like 70 or 80% of gaps will eventually fill
Yeah.
like at some point. I think that's already like a
Yeah.
statistic out. Don't quote me on the actual number, but
Yeah. That's the and that's the thing that we want to like that's something that you heard at some point. And that's something that I did too is I would hear people say things and I would trade based on that. And that was one of the reasons that I was like, well, I got to see the actual
yeah.
data.
Well, and it's
Because
super important for day trading too, right? Cuz it's like
yeah,
like most people swing and do long term because you don't have to have as much data, right? You just kind of I mean,
yeah,
it's still important, but day trading is like precision, man, and
yeah,
that's what makes this so fun and cool.
yeah. And you know what? I love, and this might sound crazy, but like I love the challenge that comes with trading because the barrier of entry of trading is so low. Anyone can open a broker. Anyone can put 1,500 bucks into it, or even 200 bucks, depending on what you're trading. You can trade options with a. I mean, you could technically buy options with a $200, but it's the part where you become a good trader. It's the part where you learn like what you're good at and what you're not good at, and your psychology and how much sizing swings can you deal with. Like, are you good at handling large drawdowns, et cetera? And that's the part of trading that I really love is like figuring out, oh, I like this trading style or I don't like this trading style.
Yeah,
And that's what obviously this tool is. I look at it every day, but it has helped me so much to understand what to focus on and what to avoid. That's
yeah.
one thing that's been huge for me.
Now I am more of a swing trader, and I know you have a swing tab. Can you show me
Yeah,
maybe just a couple more of those?
of course. So let's talk about the previous week's range.
Okay.
Very, very interesting report, in my opinion. So let me just show you this on TradingView quick. I'm just going to kind of plot out last week's range. And so this is last Monday. I'm just going to put last Friday here. So this is last week over here. This is the low, regular trading hours low, regular trading hours high. This here is this week, and I'm going to switch to a 30-minute just so it looks a little bit cleaner. Now, what this report measures is how often do we touch the previous week's high, and this is in SPY in the last 6 months. How often do we touch the previous week's high? 64% of the time. How often do we touch the previous week's low? 32% of the time. Now, to me, this is the really interesting piece. How often in the last 6 months have we touched the previous week's high and the low this week? 4% of the time in the last 6 months, which means you can see right here, we touched the previous week's high. Right here, when we broke this green line right here, touched the previous week's high. It is incredibly unlikely that price is going to come back down and touch this previous week's low.
In the following
This
week, right?
week. This week. Yeah, this week. So
Wow.
one of the ways that I love to trade this is to sell credit spreads. I'm not sure the audience
Oh
how
yeah.
advanced you
Oh
are
yeah, we
in
know. So you sell
perfect.
you sell bull put spreads or what?
Yeah, put spreads down here, super, super high win rate because it is extremely unlikely that this happens.
Oh wow.
You can do that. You can look at this on Tesla, on Target, on Walmart, on whatever else. If there is a certain, if you like, I know there are certain stocks. I only
So
do it. I do it. I
this
do it
is
on SPX and SPY.
this is
But
basically just saying that when we drop, we usually bounce.
exactly, we're not going to go and touch this previous week's low. If we touch this previous high, if we touch this green line here, it is extremely unlikely that we're going to touch this one too.
Got it. Yeah, and I mean, this could be really helpful too if you're just pyramiding into shares long or pyramiding
Yep.
into calls long, right?
Yep. And then the other piece is that only 8% of the time have we stayed within this range. So you want to be targeting one side, but not both sides.
Okay, now say that one more time.
So 8% of the time in the last 6 months have we stayed inside the previous week's range. So
Oh.
imagine, so imagine, I'm just going to do it like this. I'm going to show you. Imagine price did this week and it
Mm-hmm.
never touched either green line. Very unlikely.
8%
You
of the
should
time it'll do that.
Yeah, you should expect price to break either the high or the low, but not both. So as soon as price breaks one side, you can sell credit spreads on the opposite side, expecting price to not get to that opposite side. So in this case, price broke the top side. You can sell put spreads down here.
See, that's really helpful because as you dip, right, you're going to get paid more on premium, and you
Exactly.
and you can be confident that okay, we're probably not going there. Now, when you do
Yep.
the bull put spreads, are you just doing 1 week out, 2 weeks out? What's kind of your thing?
I've only done it a couple times, but typically I'll trade the zero expirations intraday.
Oh my gosh, you're a wild man. Like on SPX.
Yeah, the zero actually, I mean, it is I actually think the wild men are the ones that trade SPX zero DTEs directionally.
Oh,
Like if you buy
naked.
the calls or yeah, buying the calls or buying the puts, those people are, in my opinion, I don't know how they do it.
Yeah,
The
that's
swings are just
crazy.
way too much for me. But one thing about zero DT SPX options is that the decay is so violent. So
Really?
if price goes against you intraday, the decay is so bad. Like the drawdown, if you're long, like let's say you're long calls,
Yeah.
just straight up long calls. When price drops $5 or $10, you're down over 50%.
Wow.
So being on the opposite side of that trade, where if you, for example, I'll just switch here for a second, and I know that you wanted to focus on swing trading, but if you go to the previous day's range report
Mm-hmm.
on SPY, almost 60% of the time when the previous day's high is broken, the day
Uh-huh.
will close green. So here, it's not happening today, obviously, but if you reclaim the previous day's high, historically, you can expect this day to close green. So as soon as we break previous day's high, you can start to look for an entry to sell put spreads, let's just say below the previous day's low or something like that.
Interesting.
So expecting price to continue higher is something that I like to do. And personally, in my completely anecdotal experience, I feel that the put spreads decay faster than the call spreads.
Is anyone in here from Tony's group? So we got a guy at RLT. He has a special group called the Premier Group, and they are like big on credit spreads. And
Yeah.
I'm just curious if anyone in here is in Tony's group because I got to show this to Tony. He's gonna love this. This is so
Yeah.
cool.
Yeah.
Um,
This is the type of stuff that for trading SPX options, I think being on the selling side, especially on the 0 day to expiration, on the selling side is where the edge really is.
yeah,
Just
you,
because I mean, for me at least personally, it's just selling them is so much easier in my opinion because you don't have to deal with like the crazy volatility. Like when you're wrong selling credit spreads, you kind of know it. It's very rare that you go into massive drawdown and then come out of it. So the
right.
moment you start going into this larger drawdown, just cut the trade because as I'm sure the listeners who do trade them, one bad trade can wipe 10 good
Yeah,
trades.
of course. Yeah, yeah, yeah.
Yeah. So
Yeah, you don't want to do this over like Powell speaking.
definitely not.
uh,
Definitely not.
um, all right, cool. Well, let's see. We got like 15 more minutes. Let's
Yeah,
see a couple more things here.
perfect. So let me show you some stuff here. This is another really interesting one. Again, for swing trading, the opening week range. So
Okay.
let me show you here. I'm going to remove this. What this report looks at, and I'll just do Monday, Tuesday for now.
Mm-hmm.
What this report looks at is, let me just zoom in. How often does price break the high and the low made on Monday and Tuesday? So let me show you here how to set it up. You look at Monday and Tuesday, that's these two right here. This one right here, this is Monday, this is Tuesday. I'm going to look for the lowest point on Monday and Tuesday, which is right here. I'm going to look for the highest point on Monday and Tuesday, which is right here.
Mm-hmm.
So this is the area that I'm referencing.
Mm-hmm.
Now, for the rest of the week, 62% of the time, you can expect price to break the top side of this range. 62% of the time, you can expect price to break the high that's made on Monday and Tuesday, which obviously happened on Wednesday. It
Mm-hmm.
happened again on Thursday.
Wow.
So once the price action is set for Monday and Tuesday, you can go and look for, let's assume that we opened between these 2 points. You can
Mm-hmm.
look for longs targeting this Monday and Tuesday high
Nice.
because 62% of the time, price is going to get to that point and break through that point.
Very interesting. Now,
Now,
sorry. Go ahead.
go ahead.
Oh,
No, go ahead.
no, no, no. I want you to finish on this one, and then I have another question.
Perfect. So 25% of the time, we're going to touch the low here,
Mm-hmm.
the low made on Monday and Tuesday. But again, very importantly, 12.5% of the time have we broken both sides of this range. So it looks like it's going to go for it today. Could this be a good opportunity to get into put spreads? I don't know. I'm not going to tell you guys yes or no, but it's very unlikely that price is going to continue down and do this because we touched the high. It's very unlikely that we're going to touch the low now. So again, I'm not telling you to take this trade, this put spread trade, but theoretically, if it's something that you're interested in, obviously do your own analysis. But this would be a great opportunity, theoretically, to get into put spreads below this low, below the
Yeah.
553, maybe selling the 553, 552s, whatever it is, whatever
You know what I
your
love
risk.
about this too is like you can use this data and then combine it with other things you have too. Like for example,
Yeah.
I love to buy off of the 100 day moving average and the 200 day moving average. Those are like
Yeah.
two of my favorite places to buy. When the sell off happened 2 weeks ago, everyone was freaking out. I was like, yo, everything is pulling into its 200 day. Like Nvidia pulled into its 200 day, and I was like,
Yeah.
I'm buying some because it's just like, you know, um, so actually, I'm curious. Can we look at some of the swings stuff on Google?
Yeah, sure.
Because I'm in a Google trade. You know what I'm saying?
Sure, of course. So what I'm going to do to switch stocks is I'm just going to click on this and I'm just
Yep.
going to type in Google. I'm assuming you're in the
Nice.
class A. I mean, it's the same exact thing. I'm just going to
I'm actually in the Goog, but whatever.
just Noel.
Yeah, it's the same thing, right? Basically, I don't even know
It
the
is the same
difference.
thing. We don't have the
Oh, that's fine.
GOOG.
That's fine.
It's this. It moves the exact same.
Yeah.
But so let's look. I want to start with the high and low by weekday.
Okay.
So look. So different stories with different stocks. Just because SPY does something, it does not mean that Tesla is going to do something. It does not mean that Google is going to do something. You need to look always at the stock itself. So you can see that the highest point of the week for Google in the last 6 months has been on Fridays. The highest point, the lowest point of the week, sorry, most often has been on a Monday. So you want to think about an uptrending week. The lowest points are on Mondays. The highest points tend to be on Fridays.
Mm.
So this is the one that I wanted to point out here. It's very unlikely, again, that the highs are made on Wednesdays and Thursdays. So let's just look at the Google chart quick. Now, the high was made on the Tuesday so far. And one thing that I just want to mention, so this is, I'm just going to point out this week. So this is this week right here. The
Mm-hmm.
high so far has been made on that Tuesday, which is not super unlikely. It's the third
Yeah.
likeliest place, but one thing that I want to mention to everyone watching is that your edge does not play out from in individual trades.
Right.
Edge plays out over the course of 10 or 15 or 20 or 50 trades. So whether you take a trade and it's a loser and you take another trade and it's also a loser,
Mm-hmm.
it does not mean that your strategy doesn't work anymore. It means that it didn't work this time.
Right. No,
Like
totally. Yeah.
for sure. And I'm going to get to a few of the other reports that relating to the swing trading, but I just want to mention that if you flip a coin, it's a 50-50 shot on whether you get heads or tails.
Yeah.
But it doesn't mean that you can't get heads 5 times in a row.
Totally.
It doesn't change the odds of being 50-50, but you flip a coin, you get heads 5 times in a row. You're like, oh, this is not 50-50, but you know that it is. And that
Right.
same thing can happen in trading. You can go on a crazy winning streak and you can also go on a crazy losing streak. And as long as you stick to your plan, you stick to your edge over time, that's when it starts to play out.
I never go on crazy losing streaks, but no, I'm just kidding. Let's see here. So interesting, man. Yeah, this is so cool. Like, I just love how easy it's all laid out too. Um,
Yeah,
do you
thank
do you do
you.
you have any reports that tie in like moving averages?
Yeah, we do have one. So
Okay.
it's an SMA report right here. It's the SMA performance report.
Okay.
And this is going to be on the daily time frame. So let's switch to the daily and I'm going to switch to
Let's
the
go.
I'm going to go to the SMA moving average simple and it's the 50 SMA. So I'm just going to switch to the 50 here. So let's look at it here. So right now, Google is below the 50 SMA. And what this is showing here, this is the average perform. So right here,
Mm-hmm.
we should probably fix this layout probably. So here, this is the average, and now we're looking at the daily time frame. So we're looking
Okay.
at days. The average bars, the average amount of days on a
Uh-huh.
cross down is 18 days. So
Okay.
right now, let me just check. Right now, so far, we're at a little bit
Oh,
more
so this is the average number of days
below.
that that are
So
that are
we're
spent below it.
correct. And now we're at the max right now. This is in the last 6 months, we're at the max. So let me just actually bump this up to like, let's say 2 years. And now, right now, the average is 18.
Mm-hmm.
But in the last 2 years, I mean, right now we're at 21. So let's just look back for a second. So you
Yeah,
can
but
see,
you know, this was also like probably one of the biggest sell-offs in the last 2 years. So, you
yeah.
know.
So this is just showing you the average amount of days it spends below and the average amount of days it spends above. So average above in the last 2 years is 32. The average below it spends below, how many days it spends below is 18. And then this is just the performance stuff down here. So the average, like the max possible performance in the last 2 years was 34% on a cross up. And then the negative performance is 24% on a cross down. Does that make sense?
I'm sorry, repeat that second chart again.
Yeah. So on a cross down,
Uh-huh.
that's the performance, the maximum performance down and a cross down.
Oh, which
So
is what again? Sorry, show me.
that's right here, 24%.
So after we cross the 50, the max it'll drop further is 24%.
So yeah, so the way that it works is it waits for the close and then
Oh, okay.
it checks for the lowest point before reversing back. So in this case, this would be a cross down and a cross back up. So it's like, what's the worst case performance from here, from when it crossed down to before it crossed back up? So then in
Dude,
this
this is
case,
so cool. I'm gonna be playing with this all night. So hold on. I wanna look. I'm gonna look at this. So ooh, we gap down below the 50 this time.
yeah.
So let me take the low of that little inverted hammer candle and then go down another 24%, you're saying?
So the way that it works, yeah. So in
Oh,
this
okay.
case,
But look at that. It's actually right under support. Interesting. Cool.
yeah. So in this case, you take the close of this candle, and in the
Mm-hmm.
last 2 years, this is the maximum performance, by the way. The average is
Yeah.
7.5%. The
Oh,
max,
7.
yeah. So this is the average. So we're gonna separate these out just even as I'm talking to you. These need to be separated into average and max.
Uh-huh.
The maximum performance, negative performance, is 24. The average is 7.5. So in this case, let's look
It was
right
about
here.
10,
This is
which is
about 10.
close. Yeah.
Yeah. So this is the type of drawdown you want to expect. Now, I'm not going to say that price is going to reclaim the SMA now, but theoretically, this would fall in line with the averages if price were to reclaim now up here. I'm not saying it's
Mm.
going to, of course. So
It's
just
go-
even as we're talking,
it's going to. Don't worry.
I'm assuming you're in calls
I'm in
or
I'm in
something
I'm
bullish.
in I'm in October calls. So
Okay,
I have the
nice,
160 strike. I'm in the money. So I'm
nice.
not too worried.
Yeah, nice. I mean, it falls in line. Your trade falls in line with the performance right here. So
Now, if I want you to build this for the 200 and the 100 SMA, I can just request that and you can build it.
for sure. So
Sweet.
in this case, we would just end up changing. We'd actually need to add something in here to change the inputs, and that
Hmm.
would be it. You just have to change it.
Just the length.
Yeah,
Oh, cool.
yeah.
Nice, man.
So we are actually just as I'm talking to you, I realize that this is not grouped together nicely. So I'm actually going to break these up into 4 different charts. So it's not combining the maxes and averages next to each other, and it'll separate it out just because as I was explaining it, I was realizing that this could be laid out better.
All good.
And we're gonna update that for
We
sure.
have a question here.
Good.
This is a very interesting one. Is it
Okay.
possible to analyze an optimum stop distance for trading, say, NQ that will give you the best probability of hitting your target without getting stopped? That sounds really complex, but I don't know.
So one thing that's very difficult to do, and
Hmm.
not difficult, it's just everyone's style and their risk tolerance and their
Uh-huh.
risk based on their account is extremely different.
Yeah.
So if you, for example, are okay with a larger drawdown, then you
Hmm.
can move your stop further. But if, for example, let's say hypothetically for me, I'm not okay with a larger drawdown. I would rather have a lower win rate and a higher risk to reward. So I want my drawdown to be small and I want to go for larger moves, hypothetically.
Hmm.
We should not be using the same strategy. We should not be using the same
For
stop loss.
sure. Yeah.
And that's the reason that we don't have signals in here. We don't
Hmm.
have entry spots. We don't have profit targets. We don't have stop losses
Yeah.
because everyone is so different. It's based on their account size, it's based on their position size. So it's up to you to kind
Yeah.
of like
No, for
this
sure. Yeah.
information.
Yeah. Brad,
Yeah.
I'll just tell you this, man. From my personal experience on NQ, I try to keep my stop somewhere between 20 and 60 points. I don't try to go outside of that range. That's just me. And then on ES, that's probably going to be like between, I don't know, 6, 7 points to like
Yeah.
15, maybe 20. That's sort of like how I play it. But yeah, to his point, it's everyone's different, right? It depends if you're scalping or if you're day trading
Yeah.
or what.
Honestly, I want to say something about NQ, and it's not very popular. It's not a popular opinion, but I think that if you can't trade ES profitably, you should not even be thinking about touching NQ.
100%.
It's such a wild card. It's such a wild horse. Like the point increments are so big. Even if you trade the micros, just stick to ES for anyone who,
Hmm.
if you trade ES well, just stick to it. You can make amazing money trading ES. If you want to
Yeah.
trade QQQ options, I think that's a very different story. If you trade SPY and QQQ options, that's totally fine. But the NASDAQ futures are just like the NQ is just the point increments are just not suited for someone that has a smaller
Yeah.
account.
Yeah. We actually today we took a trade. I was at the doctor, but I was talking to one of my students, and what we do is we use this would actually be a cool one to build. So what I
Yeah.
look at is I look at the 50 EMA on the 1 hour, and
Okay.
basically, you can just go to the 1 hour if you want and
Yeah.
throw up the exponential. But what I look at is if we are above the 50 EMA on the 1 hour, I only look for long day trades usually.
Nice.
And I don't trade the first hour. But the minute we start closing below that, which you saw today we finally did, I
Yeah.
will start looking for shorts. And it worked out.
Nice.
So
Yeah.
I don't know.
Yeah.
Just something I kind of do, but
It, and you know what? Looking at the higher time frames really helps, especially
mm-hmm.
when you're looking at something as volatile as this. The problem is, I mean, this is my personal opinion is that let's say you want to take a short entry on the 1 hour.
Mm-hmm.
Where's your stop loss? Like where does your trade idea get invalidated? And it's
Right.
probably going to be so far away that like the dollar amount of drawdown that your account is going to have to withstand is so big that
Yeah.
for most people it's not really going to work. I mean, just
Mm-hmm.
based on their account size more than anything else. Like not it's not that the strategy or the concept doesn't work. It's more about
Yeah.
you need to wait for a close. Like let's say you're long here and you need to wait for a close on the other side. Like you need to risk so many like whatever it is. Like I don't
Yeah.
know how many
Well,
points. And that's
it's actually funny if you go to the 3 minute today. We'll just show you guys this trade because I usually show them a trade I took in a day. But
yeah,
you see that consolidation right there
this one
down
or this one.
that one. Yeah. As soon as that broke, and by the way, that all that consolidation was happening right on the 50 EMA on the 1 hour. When that finally broke, and we got that swift little candle close. Oh yeah,
Sorry, I
no, you're
want
good.
to go to the
Yeah, yeah, yeah.
yeah.
So
Nice.
so
Great.
as
Yeah.
soon as that broke and we closed strong below it, boom, I got in short.
Yep. And
And
then this is great because
stop is above that consolidation, which isn't that
exactly.
crazy.
And that's exactly this is perfect. This is exactly what I was trying to get the point across is like your invalidation point is right above this thing, this
Yeah.
consolidation high, because once price reclaims that, now your trade idea of being short is invalidated after bouncing off the
Mm-hmm.
EMA 3 times. This is a perfect trade setup in my opinion.
Yeah.
And I mean, I just think that for most people, if you can't trade ES profitably, do not switch over to NQ just yet.
For
That's
sure.
the
Yeah.
yeah, the one thing.
Love
But
it.
this was a fantastic setup. I don't usually look at the 3 minute, but this was a great setup. Great job.
Thanks, man. Thanks, man. Yeah. Like I said, I was at the chiropractor, but I was looking at it on my phone and I texted one of my students and I was like, yo, bro, I can't take this right now because I'm literally getting my back adjusted, but
Yep.
you should for sure take this. And he took it and he
Yeah.
won. So it's awesome.
Good.
Yeah.
Yeah, that's the best. But yeah, I mean, are there any more questions? Is there anything else?
Um, guys, last chance for questions. It's been an hour. Andre is like so cool that he came and did this for us. And
Appreciate it. Yeah.
I dropped the link for it. It's actually in the description of this YouTube. But I
Nice.
will also real quick just drop it one more time here. Give me 2 seconds. Yeah, guys, sign up. Use our link. The reason you should use our link, it's not going to give you like a bigger discount or anything, but it at least lets him know that, you know, like you're in our system, right? So like
Yeah,
if indicators need to get built or things, you know what I mean? Like we have higher priority because like we're partnered with
exactly.
them. Yeah.
Exactly.
Yeah. So anyways,
Perfect.
dude, any other questions for us? I mean, I hope we can have you back soon.
Absolutely. And what I'm going to do is I'm going to look into changing the lengths of the SMAs.
Mm-hmm.
I'm going to look into adding the filter for the previous day on the gaps,
Mm-hmm.
checking the color of the previous day. And I don't think that there was anything else, but I'll obviously keep you posted. Next time we can kind of go over the
Yeah,
results.
man.
If there's anyone else that wants to make any requests, again, that's right here in the build a report. If you want us to build custom trading view indicator, that's right here.
Cool. Right on,
Yeah,
man. Well, happy trading, guys. Thanks for jumping on, Andre. As always, thank you, man.
of course.
And guys, if you want to sign up, I just dropped the link in the chat.
Yep.
It's also in the description
7 day
of this
free
video.
trial.
Yeah, 7-day free trial. You try it out,
7
guys.
days. Yeah, 7 day free trial. You don't have to worry about canceling anything. It's all done through Stripe. It's all like very easy to like navigate. So don't worry about anything. It's 7 day free trial, completely risk free. So I highly recommend
Cool.
at least just poking around.
Awesome. And
All right.
please just buy a bunch of Google for me later today. Like probably like 1 billion worth is enough just to
Yeah,
kind of
maybe
get
two.
it.
I think two would be better.
Okay, cool. Thanks, bro.
Yeah,
Thanks.
you
I
got
appreciate
it.
that. All right, guys. Take it
All
easy. Thank you, man.
All right.